Trading crypto futures contracts was hard until I realized this. I spent the first 3 years of my trading career doing everything wrong. I mean, I went to OTA, Online Trading Academy, spent over $30,000 on my education, learning what hedge funds traders actually do. But then once I started trading on my own, I was revenge trading, after losses, jumping back in random setups without any plan whatsoever, trying to predict where Bitcoin was going to go next instead of just following what the charts were actually showing me. Basically, revenge trading, trying to make back what I just lost. And what most people don't realize is that if you have $1,000 on the trade and you lose 500, that's 50% that you just lost. But in order to get back to $1,000, you have to make 100% gain just to break even. And this is what most people don't realize, right? I blew up more accounts than I care to admit. And honestly, there were nights I questioned if I was just destined to lose money and not really be consistent as a trader. And did I waste all my time, energy, and effort going to OTA, going to 12 weeks of in-person coaching and mentoring and trading at one of the most prestigious hedge fund schools? That's where they get all of their traders from. I was wondering, did I make a mistake here? Is this too difficult for me to grasp? I'm just a regular person. I'm not a engineer. I'm not a mathematician. I don't really understand all this stuff basically. But then I had one realization that changed everything. Trading went from being this impossible puzzle to something I could do consistently and profitable. So in this video, I'm going to share the exact shift that made all the difference in the world. I'm sure that some of you will be able to relate. Basically, here in section 1, the painful mistakes that nearly killed my trading career is I was over trading. I was doing too much. I was not using proper risk management. I was not using stop losses. I was putting stop losses far away because I didn't want them to get hit. If you can relate to this, I would enter a position. I would put a stop loss in place at, let's say, 10% of my entry, which is probably a safe place to put it. But then when I saw it coming down close to my stop loss, I would literally move my stop loss out of the way. And then it would get close to my stop loss again. I would move it out of the way. And I would basically try to give myself more room because I was confident that it was still going to go the direction that I wanted it to go. And by doing that, I was going further and further negative until finally I realized it wasn't going the way I wanted it to go. And my stop loss was getting closer and closer to my liquidation. So it was either I was going to have to double down and add more contracts to push my liquidation farther away, or I was going to have to take a loss. And I would take the loss. And then all of a sudden, then it would turn and go the direction I wanted to go. And then I would go long again and try to make back everything I just lost, only for it to reverse on me and continue down. I was like, what in the hell? It seemed like I was being watched by somebody. The powers that be were literally stalking me and literally trying to take me out of these trades, right? And I'm sure some of you feel that way, called stop loss hunting. They're looking for your stop loss. And you might say, well, how is it possible that they could do this? How are they seeing my trade? I'm nobody. I'm not a big fish. I'm not a whale. I'm just, playing with my little money over here. Why would they even care? Because you're putting your stop loss in the same spot as 10,000 other people. There is something called a liquidity heat map that they can see that you can't see. They see where all the money's sitting. They see where everybody's going to get liquidated at, and you're in that group of people. So when you get liquidated, it's not just you, it's hundreds, if not thousands of other people. Okay. So these are some of the mistakes that new traders make when they're first learning how to trade. They're revenge trading. They're not using proper risk management. They're risking $1,000 to make $200. Their risk to reward is way off. They're not using stop losses where they should be. And then when the trade goes against them, sometimes they just get out because they're scared to lose money and they cut the loss rather than know exactly how long to stay in a trade or where to let it go. Maybe you have stories like this yourself. Maybe you've experienced some of this stuff yourself, but I'm going to explain how you can avoid these problems going forward. So the moment that everything changed was the realization that shifted everything for me basically is the exact moment I stopped trying to predict and started reacting. Yeah, we're reactive here. A lot of people come into our mastermind group and say, hey, Niko, based on what you're seeing on the chart here, is it going to go up or is it going to go down? That's a crystal ball question, okay? When I realized that the market was already telling me what it wanted to do, I didn't start predicting what it was going to do anymore. I'm basically reacting to what's happening. All right, so basically what we have here is Bitcoin futures contract trading. Up here you see BTC margin. That means I'm trading on a Bitcoin margin. I'm currently in a long position with 15,000 contracts. How do I know which way it's going to go? So what we do is we look for the proper trade setups. This right here was the previous all-time high back in 2021, right there when we hit 68,000. We had a big bear market all the way down to 15.5. This was the bottom of the bear market, 15.5. We had a giant cup and handle pattern forming a nice handle, otherwise known as a bull flag over here on the right-hand side. All right, this is a trade setup. We were waiting for the breakout here. As you can see, if I zoom in, we broke out right here and hit this resistance, previous all-time high, and then we popped up and hit that right there. What is that? That is this 73.8. This is where we broke above the previous all-time high by a little bit. We went up to 73.8, and then we consolidated under the previous all-time high all the way for about 280 days, which was about, I don't know, 7 months. And then we broke out, retested, and popped up to 73.8, 74. This is where we broke out, and we actually came up to a new all-time high right here at 108. So I'm telling you all this to tell you this. 108, double top to 109, and then we had a nice falling wedge. This is a trade setup. So we have a falling wedge, as you can see by this pattern right here. But where did we come down to? Right here. Before we broke out, we came down to retest previous all-time highs. Boom, right there. We retested the 74K. Boom, we wicked down to it and we broke out. So we were shorting this all the way down in this falling wedge. I always recommend that we short the tops rather than long the bottoms. But on this breakout, we pumped up all the way over to new all-time highs. We went right above this, which was the 108, 109. We went up to 112 and made a new all-time high right here, creating yet again another falling wedge or bullish flag pattern. As you can see, these bull flags tend to break to the upside 70% of the time, and it broke out and we went long as well. But here's the current situation. Right now, we have come up to 123.5. We came down to retest the 112, and we came up to a new all-time high here at 124. So we went right above previous all-time high and wicked above it a little bit, just like we did here. 108, 109 fell. 112 fell. 123, 124 fall. What is this? This is another possible falling wedge that we are breaking out of. The difference this time, guys, is we now fell back below the 112. What was previous resistance became support, breakthrough, resistance, resistance, resistance. Now we're back underneath the 112, and this is a giant M pattern. So as I always say, we're looking for certain patterns. We got an M pattern. We came back below previous support resistance. This is a possible trade setup to the downside, expecting a drop from the top of this M to possibly this range down here, which is back right under 100K at the 99 to 100,000 zone. And ironically, just so happens to retest the top of the previous flag resistance as support. Resistance, 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 support. So these are called trade setup, guys. We'll probably be shorting this on the way down, and unless we break back above the 112. If we break above the 112 and we hold as support, we could see a run up to a new all-time high. But if we don't, and this stays below the 112, retest as resistance, we will short it on the way down. And if you don't understand exactly what I just said and you want to see it in action, then what you want to do is click the first link underneath this video. It's a link to register for an upcoming webinar where I'm going to be going live, sharing my screen live, and explaining exactly how this strategy works step by step. You'll be able to look right over my shoulder and actually see me do this and possibly make hundreds, if not thousands of dollars right in front of your eyes. Once you see it done, you'll understand you'll be able to do this yourself. Click that link below, get registered for our upcoming webinar. We call it the crypto wormhole method, and I'm going to explain how this reactive approach immediately improves your win ratio to 70% of the time. Look for that link down below. Now, let's get back to step 3 of this video, which is how this changed my results completely. And quite frankly, guys, it's been transformational. So most people are very predictive when they're trading. They trade based on emotions. They trade based on what they think is going to happen. Price is going up, they think it's going up, so they go long. The price is going down, they think it's going down, so they go short. They're chasing the trades. They're basically jumping in, trying to catch the rising balloon or trying to catch the falling knife. And you know what happens when you try to catch a falling knife? Generally speaking, you get cut. It usually bounces and slices you on the way back up, okay? You enter a trade on a falling knife, which is when the price is already dropped. You think it's going to keep going down. You go ahead and go short. And as soon as you go short, or shortly after, it bounces and starts to go long and goes back up rather. And now you're in a negative position. And then what do most people do? They question whether they should have went short, they reversed the position and now they're long. And as soon as they do that, it turns and comes back down, because when it bounced, it was going to probably double bottom and maybe triple bottom and possibly even go down further. So you should have stayed in that short. But see, most people don't understand this. What we do is we do not do that to begin with. We do not try to catch falling knives. We do not try to jump and catch rising balloons. Basically what we're doing is we're waiting for the bounce, and then we're determining if it's going to double bottom or not. Actually, we're going to wait for either a bear flag to form or a bull flag to form, and then we're going to determine whether this bull flag or this bear flag is either up against resistance or bouncing on support. If you have a bear flag, which normally breaks to the downside, but it's up against major support and resistance level, there's a good chance that that's the 30% of the time that it does not break to the downside. If you're in a long position, you see a bull flag formation and you're anticipating that it's going to break to the upside, because bull flags break to the upside 70% of the time. However, this bull flag is right up against resistance, major resistance, then there's a good chance that it's going to break to the downside like it does 30% of the time. So instead of trying to predict which way it's going to go, we're going to suggest that you react to what it does instead of trying to predetermine what it's going to do. So what does that mean? If it's a bull flag, we're going to wait for the breakout, up or down, doesn't matter. In fact, if you're doing this right, you shouldn't even care which way the direction is going to go. See, in Crypto Renegades, we don't care whether the price goes up or down. We're going to make money in either direction, but we're going to wait for the proper trade setup. We're going to wait either for the apex to break to the upside or the downside, and we're going to wait for the retest or confirmation, and then we're going to enter that position short after the breakout. So we're reacting to a breakout rather than trying to predict the breakout. That's step one, and that is a much more reactive approach. And I'm telling you, once you understand this, you're going to be sitting on your hands more waiting. You're not going to be reacting to these big drops or these big pumps. You're not going to be, oh shit, I missed out. Oh man, should I jump in? Oh, should I get in before it drops any further? No, you shouldn't. If it's already dropped, you wait for the bounce and you wait to determine whether it's going to consolidate there and create a perfect trade setup. And that's when you get ready to enter on that breakout. And you might only do this once a day, once every 2 days, but you'll make way more money than you would trying to chase all these trades, getting in and out, getting cut by the falling knives, trying to catch the rising balloons, and just basically over trading to the point, you'll make some on some, you'll give it all back on the others. You get frustrated, you get pissed off, and you start to throw your computer out the window. We don't want you to do that, guys. We want you to calm down, calm your mind, relax a little bit, and realize that if you miss what you think was a good pump or a big dump, and you think you missed the big trade for the day, just remember, these trade setups and these great moves in the market and Bitcoin futures contracts, it happens every day. It's 1 to 5% per day. So if you miss one, just wait a little while. It's like if you missed the bus, just wait 10, 15 minutes. There's another one coming. So do not stress about it. Just wait. It is better to stay out of a trade that you missed and conserve your capital and wait for the right trade setup than for you to jump in at the last minute trying to catch up or make up back what you think you lost. You didn't lose anything that you never had to begin with. Don't worry about that. If you missed a trade setup, you didn't lose anything. Okay, you might have missed an opportunity, but you didn't lose any money. And it's better to have not lost money and to have not been in the trade to begin with than to stress out about missing something. Okay, that is rule number one. Now, how can you make the same shift that I'm talking about here? I get this question all the time, guys. What is the market showing me? That's a question you need to ask yourself. What is the market showing me? Instead of looking at it and seeing that it's moving up and say, I'm going to go long, or it's moving down, I'm going to go short, what you need to do is zoom out to the higher time frame. I look at all the time frames from the 10-minute up to the daily, even the weekly, and before I make any trades, I look at the stochastic RSI on the weekly, I look at the RSI on the weekly, I see what is the overall trend and direction of the market. I'll draw my support and resistance lines, I'll look at the current trend, I'll go down to the 1 hour, then I'll go down to the 10 minutes sometimes if I'm going to scalp, and I'll see what's actually happening on the local level. I call it the local level. It's like being on the sidewalk, right? You see the ants walking around by your feet, but when you look at a higher time frame, that's like getting in a hot air balloon and going up 200 yards in the air. You can't see the ants anymore, but you can see the surrounding cities beyond the trees. You go up to the higher time frame to get an overall view of what's happening in the market. Come back down to the lower time frames to actually enter your positions. We show you that in our mastermind. Our traders are doing this every day in and day out, making multiple double and triple digit gains almost on a daily basis by using proper risk management and using leverage appropriately. Not super high leverage, the right amount of leverage, but with the right risk management, and that makes all the difference in the world. It doesn't even matter if you're at 100x leverage. If you have a stop loss, a very tight stop loss at 1 to 5% of your entry, you're still not going to lose more than 1 to 5% of your margin on that trade, even if you're at 100x leverage. So there will be a lot of gurus and YouTubers out there telling you how risky leverage is, and it can be if not used properly. So you need to understand how to use it properly, and that's what we'll show you. So the hardest part about trading isn't learning the technical stuff. That's actually quite easy. It's getting out of your own way and letting the market do the work. Once you stop trying to be smarter than the market and start following what it's actually doing and what actually works, everything becomes simpler. So your job isn't to predict the future, is to react to what's happening right now with discipline and consistency. So if you want to see exactly how I read the market signals and react instead of predict, I'm hosting a free training where I'm going to break down my crypto wormhole method live. Just click the first link in the description to grab your spot, and I'll see you there.